missed goals set by the CEO, Jeff Immelt. The company reporting fourth quarter earnings that matched Wall Street estimates. Bill, Kelly, back over to you guys.
There it is, down 3%. Thanks, Dom. We'll see you a little bit later. So why is General Electric getting smacked today? The earnings did seem pretty innocuous, the profit margins notwithstanding. One of our next guests says this time the street is getting it wrong. Could this dip be a buying opportunity for GE? With us now, typically we have a bull and a bear in our stock brawl. I'm telling you, our whole staff scoured Wall Street, couldn't find a bear. We have two bulls with us today, Eric Marshall from the Hodges Fund and David Seaberg from Cowen. David, what do you make of that? I mean, there's nobody out there. So why doesn't this stock move higher in an appreciable way if there are no bears out there?
I think it will. I mean, look, it's all about their industrial operating margin. I mean, that's what set it off here a little bit. But this company is restructuring. I mean, things are changing there. They're getting out of the financial business. They're becoming much more of an industrial. If you look at the industrials and the way they're set up, I mean, GE is trading at 15 times. Most of these industrials, you look at UTEX, you look at Honeywell, they're trading at 18, 19 times. If they can execute this properly, the stock's got a lot more margin expansion here. The stock will go higher. So I think that is the real important key here. Look, we saw this thing sell off over the last couple of weeks. It's off roughly 3.5% before the print. So I think a lot of the selling get out of the way ahead of time. I think you're seeing a little pressure on it right here. But I think it's important to look at this as an opportunity to get in.
Eric, I'm no chartist, but it doesn't look like the stock has performed all that well lately, either in response to this earnings report or, as David mentioned, going into it. What's going on here?
Well, I think obviously there are some bears out there. Otherwise, the stock wouldn't be down so much today. But really, the company has been going through this transition here. We've added it to our mutual funds over the last 6 months. We now own it in 3 of the 7 mutual funds that we manage. And we really like the fact that they've restructured the business. And when you look at it, I think you got to look through all this noise because there's a lot of restructuring still going on right now and a lot of moving parts. But if you look at it over the next 2 to 3 years, GE has really positioned themselves as the leading global industrial company. They have exposure now to just about every facet of the energy and power market, as well as water infrastructure, transportation. And a lot of these industries have really gone through periods of consolidation, in some cases a decade's worth of consolidation. Capacities become more rationalized and pricing power is returning. You're going to see those margins expand, we think, over the next 2 to 3 years, and they just haven't gotten full credit for it yet.
It's not our parent anymore, but it is incumbent upon me, for full disclosure, anybody that's worked for CNBC as long as I have, a lot of us have shares of GE. We've been watching this stock, and frankly, David, I mean, I've been hearing about this restructuring since Jeff Immelt took over in 2001. Yes, he faced 9/11. Yes, he's faced some wars. Yes, he had the financial crisis. But the stock peaked in late 2000 at $60 and has never looked back. And he's been restructuring the whole time. I mean, when is this stock going to gain some traction in a meaningful way?
Look, I can tell you that, the flows that I'm seeing on the desk, the important thing to kind of look back on is the money flow and who's buying this name. We're seeing a lot of hedge funds on this weakness coming in and buying the weakness. They obviously have done their research. I can tell you, when I look at this name and I look at them restructuring and getting back to in line with what the other industrials are trading at, this stock's going right. This stock could easily go right back up toward its highs. I think we're at a crucial level here. Technically, we broke through the 50-day. We get down toward the 100-day. And I think you're going to see a tremendous amount of demand come in for this name.
Eric, even the company's management, though, doesn't seem to indicate that it's going to be growing earnings by leaps and bounds going forward. So, to some extent, you put money into this stock. How are you confident that the purchasing power, that the earnings power of this company is going to reward you?
Well, that's very important. If you look at what the orders that came in this last quarter, if you look at the orders on the industrial side of the business, they were up almost 10%. So as you do get a recovery in the global economy, which is lagging the U.S., you're going to get a lot of leverage to capacity, as well as the fact that they've taken so much costs out of these businesses. As demand does recover in the global economy, you're going to see that those profit margins expand, and they'll get back to that historical earnings power. They've also shown a real commitment to increase shareholder value through all this restructuring, but also return capital to shareholders. Right now, you're getting a little over a 3% dividend yield on a stock that trades about 15 times earnings. We think it's a very good risk reward for somebody looking out over 2 or 3 years.
Okay, I'll be the bear. I've heard this all before, many times. We'll see. It's a show me time right now for a lot of shareholders.
Thanks, guys. Have a great long weekend.
Good weekend, guys.
See you.
30 minutes to go here, hanging on, but not by a lot. The Dow up 12 points. We need to be up 20 today for